Hello, I'm Dan David, founder of Wolfpack Research. I'm here today with Carson Block, founder of Muddy Waters Capital, and we're going to talk about Burford Capital. Carson, you said that Burford is exaggerating their IRR, their ROIC, by a great deal. How are they doing that?
So one of the things that is key to understanding how Burford manipulates its metrics is this idea of concluded investments. Burford only calculates these metrics based on concluded investments. And while it might sound like with litigation, it should be pretty clear whether something is concluded or not, Burford shows that that's anything but. So we've identified through the cases we've looked at 7 ways in which Burford manipulates the ROICs and the IRRs. So there are other cases where they delay recognizing or categorizing something as concluded when it's been a loss. So they keep it out for a while. They play around with the timing a decent bit because that impacts IRRs. Another thing that they've done is when they've had a partial recovery, they cherry pick what they want to allocate in terms of expenses. So it shows a really high ROIC or an IRR, even though those expenses are just a portion of it. So yes, there are a number of cases that we've reviewed and we discussed in the report that show these 7 techniques that Burford has used to manipulate ROIC and IRR. So the case that is most interesting, most egregious that we've found so far is Napo Pharmaceutical. Napo Pharmaceutical was a client of Burford's. Napo was suing another pharmaceutical company called Salix. Now in 2013, Burford categorized Napo as a concluded investment. And when it categorized it as a concluded investment, it marked the ROIC at 113%. Here's the funny thing though. There was actually a jury verdict in that case the next year in 2014. So, okay, maybe Burford was just prophetic, or maybe the jury verdict was even better for Burford and Napo than Burford had anticipated. So maybe that's not so bad to claim a case is concluded when it's still ongoing. Well, guess what?
What?
Napo lost at trial. There was a jury verdict in favor of Salix. This was a loss, but it was already marked as a concluded case with a highly favorable outcome for Burford. 2014 jury verdict in favor of Salix. Napo gets nothing, but Burford keeps the case as concluded and actually boosts the ROIC.
How is that possible?
Well, it appears that Burford entered into an agreement with Napo whereby Napo owed Burford money, a significant amount of money. Now, we don't understand the circumstances behind this agreement, but the thing is Napo really did not have the cash to pay this. So Burford's carrying this significant ROIC 2015, 2016. Napo has to enter into a debt forbearance agreement with Burford because they have no cash. Now it's clear that at this point, at the end of 2016, when they entered into this agreement, there was a plan. So the plan was to merge Napo, reverse merge Napo into Jaguar Animal Health. Now both Napo and Jaguar Animal Health were founded by a woman named Lisa Conti. Napo didn't have the money to repay Burford, and so what happened then was Jaguar effectively bought Napo. Jaguar raised $8 million and issued a bunch of stock to Burford and paid the $8 million that it raised directly to Burford. So the $8 million Jaguar raised, $3 million of it came from Burford's largest shareholder, Invesco. The fund that invested in Jaguar is run by Mark Barnett. Now, Mark Barnett is well known, Neil Woodford's protege. And so basically what happened is this one Invesco fund backstops this offering in order for Burford to get paid cash. It's really interesting that what this effectively was a bailout. The largest shareholder of Burford bailed out Burford's investment in Napo. And by the way, Burford would not exist but for, or probably would not exist but for Neil Woodford when he was at Invesco putting it in business. We consider this and how Woodford and Barnett have invested together a number of times and have been criticized in the past for potentially manipulating marks of companies that have private investments, such as IP Group with Oxford Nanopore. This appears to be drawn from the same playbook of manipulating marks as they've been accused of in other situations. So what's really interesting to note about NAPO is that the company in first half of 19 quietly trued it up. So they had this big sale, big realization from another slug of Peterson, again 6 days before the end of the period, and they disclosed in a footnote that they had taken that one case, which turns out to be NAPO, and they'd written it down significantly to what was the actual cash received and the stock that they were able to monetize, years after this was apparent that they weren't getting paid anywhere near the level at which they were carrying the case.
Now, this is years after. What would their 2013 and 14 look like if they hadn't marked it up? I mean, you know, if they had to go back and restate those years, what would that have looked like?
So in the 2013 annual report, when Burford presented the 2011 vintage, they showed that the overall ROIC for that vintage was 53%.
Nice return.
Without NAPO, without that just egregiously mismarked case, NAPO, that wasn't even concluded at that point, the ROIC would have been only 2.9%.
Wow.
And that is what this company has done. They've been doing this for years, misleading investors about their returns on cases, and that pattern continues through today.